You've probably heard this term AI bubble getting thrown around a lot lately. Is it a sign of some revolutionary new age, or is it more like a ticking time bomb for the global economy? So today, we're going to break down what it all means, especially if you're not a Wall Street expert. This is the big question, right? It feels like every single day there's a new headline, either cheering on the AI revolution or warning that a huge crash is just around the corner. So, in this explainer, we're going to really unpack both sides of the argument. Okay, before we can really dig into the whole AI debate, we first need to get on the same page about what a financial bubble actually is. Trust me, getting this one core concept down is the key to making sense of everything else. To put it simply, a bubble is what happens when pure hype and excitement, what economists like to call speculation, push the price of something like a company's stock way, way beyond what its actual business can justify. The big fear is always that eventually reality kicks in and the price comes crashing down with a pop. We've seen this kind of pattern before with big new technologies. It's often called a hype cycle. Things start with this massive surge of excitement, a peak of inflated expectations. But then, when the tough reality of what the tech can't do sets in, enthusiasm can just plummet into a trough of disillusionment. The real question is, where are we on that roller coaster right now, and what comes next? All right, now for the evidence. Let's look at the warning signs that have so many experts and even central banks getting really concerned that we're living through a classic bubble scenario as we speak. Just look at the insane scale of the investment. A company like NVIDIA, which makes the essential computer chips for AI, has seen its value just skyrocket to these astronomical levels. I mean, we're talking about a valuation that's bigger than the entire economy of countries like Germany or Japan. That kind of crazy, massive growth is a classic red flag for a potential bubble. And then there's this weird phenomenon that analysts call circular investment. Picture this. A huge tech company like Microsoft invests billions into a smaller AI startup. Then that startup turns right around and uses that same money to buy products like cloud services back from the big company that just invested in it. It looks like incredible growth on paper, but some people worry it's just a few giant companies passing the same cash back and forth, puffing up their own valuations in the process. And look, it's not just a few skeptical analysts who are worried. We're talking about major financial institutions sounding the alarm. The Bank of England, the International Monetary Fund, they've all put out warnings saying, hey, the values of these AI firms might be dangerously optimistic. They're worried investors just aren't prepared for what could happen if this whole AI boom doesn't deliver on its colossal promises. But hold on, that's only one side of the story. There's also this really powerful counter-argument that says, despite all the hype, this is not a bubble at all. Or at the very least, it's not like any bubble we've ever seen before. So the most common comparison you'll hear is to the dot-com bubble of the late 90s, but there are some massive differences. Back then, people were throwing money at brand new companies that often had zero profits and sometimes not even a real product. Today, the AI boom is being led by some of the most profitable, established companies on the entire planet. We're talking giants like Microsoft and Google that have massive real-world revenues. And this isn't just a random opinion. The head of the U.S. Federal Reserve, Jerome Powell, has pointed this out himself. He's basically said that unlike past bubbles, the corporations at the heart of the AI boom are making enormous amounts of actual money. They aren't just selling a dream of future profits. They have the profits right now. So we're left with two very strong, very opposite arguments. And this leads to a pretty fascinating question. If so many people are openly talking about a bubble, why does the market just keep climbing? Well, the answer seems to have a lot to do with plain old human psychology. This is the question you see all over the place, from financial news shows to internet forums, and it feels like a total contradiction, doesn't it? If you know you might be in a bubble, shouldn't you, get out? Well, the behavior of a crowd is almost never that simple. So what is really going on here? Well, first, there's a powerful fear of missing out, what everyone calls FOMO. The thought of missing the next huge price jump is often way scarier than the thought of a potential crash. Second, you have tons of traders who think they're smart enough to time it perfectly and sell at the absolute peak. On top of that, you have huge amounts of money in long-term retirement funds that aren't reacting to daily drama. And finally, it's kind of like a game of chicken. Nobody wants to be the first one to sell and risk watching everyone else keep getting richer. So, okay, this is a fascinating debate for experts and traders, but why should you care about any of it? Well, because the stakes here are incredibly high for the entire economy. Here's the simple fact. AI-related investment has become a massive engine for our economy. Some estimates say it is driving a huge portion of all new economic growth. If that engine were to suddenly shut down, if this bubble were to pop, it could be enough to tip the entire global economy into recession, and that would affect jobs and financial security for just about everyone. And that leaves us with the ultimate question. Are we just watching a familiar old story play out, a classic tale of hype followed by a collapse? Or is the AI revolution so powerful, so genuinely profitable, that this time the old rules just don't apply? The answer is going to define our economic future. What do you think?